And we're back. We're making a YouTube video today about stocks that I'm currently watching into 2023. These are stocks that I don't own but are very high up on my watch list, and I'll talk about potentially when I could or why, what needs to change for me to buy them. So something a little bit different, wanting to talk about some stocks that I don't normally talk about. And yeah, apologise there was no video yesterday, as you guys might have saw when I posted on YouTube. I did a bit of a community post and said that I ended up catching the CV again the second time on the weekend. I didn't realise until Monday, but yeah, I was a bit worn out. I didn't really have the energy to do a video. You might have been able to, I think it was this video here, I did the video on Sunday about InMode, and you might be able to see that I was struggling a little bit when I was talking. I was just absolutely worn out and I had such a runny nose and a cough, but most of that's gone now. I still have a little bit of a cough, but yeah, I was pretty much unable to record a video yesterday, but I feel okay now, so we'll get started. And as well as that, I just dropped an exclusive video on Patreon, which was how to value a stock. It's about half an hour long, and what I look for when I value a stock. So if you are on a Patreon, go check that one out. If you're not on the Patreon and you want to see it, that's where you need to go. But let's get stuck onto these stocks that I'm currently watching going into 2023. So I believe there is 5 on this list. There's a few US stocks, a few UK stocks, some that I think you will have heard of, like this first one, but I think towards the end of the video there might be a few that you haven't heard of. So Amazon, I'm only going to spend a couple of minutes on them, no deep dives, just to make everyone aware of that. Amazon, obviously a big tech, one of the big techs that has been absolutely destroyed. You can see here since November 2021 the stock is down nearly 46%, nearly 50%, and it's one of those big techs that has lost a lot of value. Now Amazon, for me, the reason why I've not bought Amazon at the moment is because I feel like there was better opportunities. I felt like PayPal was a bigger discount. I was buying that one. I felt like Google was a bigger discount. And even the likes of Meta that has the questionable spend on the metaverse, I think once you get your head around that situation and you look at the business that's behind it, I think when you look at the valuation that was at, I think that was a lot better value than Amazon. But nevertheless, Amazon still at $98 is interesting to me. The only issue that I've had is that the other big tech stocks have massively been drawing in a lot more than Amazon. However, the case is that if the other big tech stocks like Google, PayPal, or even some other stocks that I'm buying at the moment rally up and I'm not looking at buying them anymore, and Amazon stays around this $98 range or even goes back to this kind of $80 range, I think Amazon comes quite interesting, especially if it stays at these levels throughout the year in 2023, which you could do. You can see here basically from 2018 the stock has basically gone flat for nearly 5 years now, so it could easily go flat another 5 years. And the thing is, if this stock stays flat for another 5 years, what's going to happen inside the business? Then financials are going to grow and grow and grow, and the stock is going to come cheaper as well. And the thing at the moment is Amazon's had a tough year. 2022, start of 2023 has been a bit of a tough year. Obviously, you've had the big e-commerce boom, and then you've had the bit of a slowdown. Amazon have also been reinvesting into the business a bit heavy, and that's taken a lot of the profit down. But when that calms down a little bit going forward, and hopefully them e-commerce sales come back a little bit, you look at the company, and obviously the strong dollar situation as well. If they're putting over 10% revenue growth, they start growing profit back going forward, and Amazon Web Services still does really well. I think that's one of the big issues, is that no one kind of knows what Amazon Web Services is still going to grow at. There's a little bit of worries it's slowing down, and that's obviously one of the main revenue growth drivers and one of the main profit drivers. Obviously there's a bit of concern about there, but if that carries on putting them high 20% growth in, then obviously that's absolutely brilliant. Then I think Amazon actually comes a really interesting opportunity. And as well, what you got to consider with Amazon is that I think at the moment everyone's a bit unsure what Amazon is. I think everyone's a bit unsure what Amazon's going to grow at. Historically Amazon's always grown at like 30+% revenue growth, and now everyone's like, well, is it going to be 20%? Is it going to be 10%? Is it going to be 15%? Is it going to be 5%? And I think Amazon's just a bit in the unknown situation at the moment. But I think when you look at Amazon as a whole, and you look at the Amazon Web Services and other parts of the business that they'll continue to drive forward, the advertising, the Prime side of the business, the one-day deliveries that they have, I only see Amazon being a major company in the next 5-10 years still. And it does come really interesting. So this is a stock that is on my watch list. It's just got to stay here a little bit longer and potentially other opportunities disappear. And I definitely could be a shareholder in Amazon, so it's one that I've kind of watching at the moment, and it's quite high up on the watch list. So that's something that you could potentially see me entering towards maybe the back end, maybe the midpoint of the year. So we'll see. A lot of it depends on if there's a rally of Amazon stock in the next few months. Next up is JP Morgan. So this is actually quite a boring and safe stock, but there's nothing wrong with boring and safe stocks. It's a stock that is obviously a lower times earnings because of it being a bit of a bank stock. But what is quite attractive is its historic growth and also its constant dividend history payout. And with JP Morgan, the reason why I like this or would not mind to have a JP Morgan Chase in my investment portfolio is it would be one of those stocks that I can just put in the background and not worry about it, and it will just bring in a steady return over the next few years as it grows its profit, its revenue, and I collect a bit of a dividend in. And why I like JP Morgan so much is, first of all, it's got a fantastic reputation. I've gone on money.com here and you can see these were the picks for the best national banks in the US for 2022-2023, and who was the best overall? It was Chase. Chase was the best bank in 2023, and there's loads of different opinions about potentially the environment that we're in right now, higher interest rates, default rates, but I think when you look at the situation, we're not in what people are saying it's going to be like an 2008 time and the economy is going to collapse. I don't think there's any of that going on, and there's different sides of if this period of time is going to benefit JP Morgan or if it's not going to benefit them. So I'm more looking at it from a long-term point of view, and I think they'll still, with what they have done previously, still do very well. And also what I think they're doing really well at the moment is their execution expanding internationally, like the UK, for example. And you probably have seen, if you're from the UK, JP Morgan Chase has been pushing its Chase platform out a lot in the UK, and when you look at what they're offering at the moment, it's actually a very good product, and obviously they've got a very good history and a good platform here, and I think that will also help drive success for them further down the line going forward as well. So I think once again you're getting just here is a very established, safe brand that has a dividend, which is why I'm really considering this one at the moment. And at the moment it is having a bit of a pullback. My only wish is that potentially it was something around that September time that I looked at when it was $104, which is the only little thing that's a little bit annoying. So we'll see if it has a bit more of a pullback. Next one's Walgreens. So Walgreens is, once again, I'm looking at this from a bit of a recovery play. If you look at the share price, it's been massively beaten down since that 2015 levels. A lot of that's done to the profit being hit massively on the stock. So a bit of a turnaround play, and as well as that, a dividend, obviously 5.2%. And what you'll see with Walgreens is they haven't really been growing that much, which is some of the issue that they have with Walgreens at the moment. And they have had a lot of pressure on their bottom line and top line because of pressures at the moment, like wage increases, for example. Now, the thing with Walgreens is the actual legacy pharmacy stores is not what I'm too fussed about. For me, the legacy kind of farm stores, they're just managing that situation where can they cut costs, can they get rid of stores that they don't need. That's just managing costs at the moment, and there's not going to be much excitement from that part of the business apart from trying to manage the costs. The interesting part of the business here that they're trying to expand into is the Village MD and its acquisition of Summit Health as well. It's been quite big into its acquisitions at the moment, and that's also trying to expand it into its clinic growth as well. And you can see here that its US healthcare segment in Q1 financial 2023 indicated 38% year-over-year growth, and Village MD grew 48% thanks to clinic growth. And this is where the big growth driver for, and hopefully the profit driver, will be for Walgreens. So for me, I've got to see if they can continue executing on this growth into this sort of space. If they can continue, manage the costs on the pharmacy business, maybe still grow it at a couple of percent, but they can really expand into this healthcare and this clinic growth space. This comes a really interesting turnaround play, and hopefully they can go to a point where, if we look at what analysts are forecasting, if they can deliver on these financials, that'll be really good. And obviously if it can sustain a dividend around about 5%, it comes a very interesting play. So this is one that I'm just watching for a couple more quarters to see if they can continue to execute, and it could be one that I consider in 2023. The next one's a UK stock. It's called Alphawave. So this is a 748 million market cap. It trades at 40 times earnings. And it was only a company that was founded in 2017, so this is quite a new company. Now, if you're on the Patreon, you will know we did an actual stock request video, so we talked about this stock for 10 more minutes, so it's a bit of a longer deep dive into the stock. But really quickly, looking at the stock, if they carry on doing what they've done and executed on previously, this stock is going to absolutely do fantastic. You see the execution they've had here, and you can see what analysts are forecasting, and it's same with the business projections at the moment. My only concerns that I do have with Alphawave is that, for me, I personally don't know this industry that they're in that well, which is in the semiconductor connectivity space. I don't have great knowledge in this space. It's why you have probably never seen me really buy into the likes of AMD, even though I am really interested in that stock. Intel, for example, or Nvidia, I don't really have the knowledge, and I don't invest into things I don't really know. However, when I do look at the stock and I do look at it trading at 40 times earnings and the growth it does have, it does really interest me at the moment. The only concerns that I have with Alphawave is there was a short article put on Alphawave, which you can read, which was posted by the Financial Times, which criticised some of the investors that currently have ownership in the business, and some checkered past that they do have, and also some questionable business deals that they have. But since then, they have signed customers like Intel, Samsung, for example, Taiwan Semiconductors. So any sort of doubt around the current customer base has been kind of put down with them big signing of customers. And also the actual owner of the business, the co-founder of the business, he actually has a very good pass on execution when you look at some of the past businesses he's sold. So that kind of helps you around that concern about some other owners or shareholders that are currently inside the company. The only other issue that I do have with the business is that at the moment this growth has been supported with acquisitions. So my only concern is if they do stop acquiring businesses, which obviously you can't acquire businesses all the time, what growth rate does this slow down to? Because at the moment the growth does look absolutely insane, but that's the only other issue there. But when you do have a company at 36 times earnings with a 95% gross margins, and you are currently growing like this, it could be quite interesting, even though at 40 times earnings you would go, that's a little bit high. When you are growing at 100% year over year revenue and your profit is going absolutely insane as well, it's quite interesting. So it's one that's on my watch list. It's just more trying to get the confidence into a sector that I'm not confident on, I'll have confidence in, which is the only stopping point at the moment. And the last stock on this list, and another UK stock, is Darktrace. So this is interesting because they actually brought out a trading update, I believe it was last week. You might be able to see the little drop off that it had there if we zoom out. There we go. The 10th of January, we can see it dropped 14%. And it's actually giving it all, it did have a bit of a rally, but I've just realised it's actually giving it all back since then. Darktrace is a bit similar to Alphawave. Once again, it's an area I don't have much knowledge in, so it's more building up that confidence for myself about what I'm investing in, which is kind of stopping me here. But what I know is cybersecurity at the moment and cyber defense is massive, and it's going to be massive in the next 5-10 years. And Darktrace at the moment are doing a fantastic job of taking advantage of that. And you look at the current programs that Darktrace are offering, and you look at the amount of customers they have, and then customers are using more and more of their programs, is very reassuring to me that they have multiple products with multiple incomes, and these clients that they sign up then go use one of their products, two of their products, three of the products, four of the products, and they're drawn into that system, which is a very good moat to have. And if they keep adding these programs and what they offer services into the system and get them more tied in, a bit like a Datadog, which is a stock that actually nearly made this list as well. I'm actually really interested in Datadog, and I didn't put it on this list. The more that they kind of get sucked in and keep using them is obviously a really good TAM that you build up there. It's a 1.8 billion market cap. It does look very expensive on the P ratio, but that's only because they make a very slim amount of profit. So if I just dig very quickly into the financials, you'll be able to see here that they've just turned profitable here in 2022. Actually, when you look at free cash flow, they actually do generate 107 million in free cash flow. So they would trade around about 17 17, 18 times free cash flow, which then isn't too bad from that point of view, which is obviously something to consider. And they are going to carry on growing at 30% by the looks of it. One of the reasons why they did drop the other day is because of the trading update, where they were expecting a little bit more growth, or analysts were expecting a bit more growth, and they came a little bit under it. So that's something that I am kind of looking at. The only thing that did kind of worry me about Darktrace is that for some reason they were looking to sell the business. I don't know why they're looking to sell the business, because when I look at the business here, you know, it's a recent IPO. They look to be doing absolutely amazing. You look at the business and the financials they're going to do, you'd think, oh, you know, unless it was a crazy offer, you'd be quite happy to, and especially when your share price has been absolutely diving like this, you know, you probably wouldn't want to be selling your stock at this sort of levels. You know, why would you want to be looking to get taken over? So that was a bit of a thing that threw me out, like, strange time to be looking to be acquired, you know, potentially when you're at these sort of levels. And then someone's offering another 50% premium, you're like, well, it'd be stupid not to sell the business right now. But when you're down at these levels, I don't know why you'd want to be looking to sell out the business, because the valuation would be probably quite a low valuation. So that's only something that kind of confused me a little bit. But same again, it's just, once again, I'm just trying to get a bit more knowledge in this space before committing anything too much into here. And very quickly I thought, you know what, let me just throw Datadog on the end, because I did mention it. The only thing with Datadog, once again, very high valuation. It is kind of getting to the levels it was at before the whole CV situation, where it was $45, but it's still $70. Problem is with Datadog at 22 billion market cap, it's still a very rich valuation. The company's doing amazing, and the financials are still very good, but it's just, you know, way too much. So this is on my list that if it gets down to like $50, $40, then I am going to take a bit more of a serious look into it. So that's more just a price target that I have for it before then I go do some research a bit more into it. So that's just a price target that I have for that one before I do go any further into that one anyway. So those are just some stocks that I'm watching, just talking about some different stocks today. I hope you enjoyed something a bit different anyway, guys. If you could, smash that like button. If you're new around here, subscribe, and I'll see you in a bit.